Hi all, this video is about bank reconciliation statement and various theoretical aspects of BRS. Before we enter into a topic BRS, let us see few accounting terms relevant to the topic. The first and foremost book which we need to consider for preparing BRS is cash book. It is of three types, namely simple cash book with discount column, cash book with discount and bank column. A simple cash book makes a record of all receipts and payments in the form of cash, coins, bank draft, and treasury notes. The receipts are all recorded in the debit side of the cash book and payments are recorded in the credit side of the cash book. Next, an additional column for discount added along with cash column, which is also known as double column cash book or cash book with discount column. On debit side, cash discount allowed to debtors will be entered, and on the credit side, discount received from creditors will be recorded. The final type of cash book have furthermore column represents the payment or receipts made through check will be recorded in the additional column. In common, the cash book with discount and bank column or triple column cash book will be maintained in the organization. The second and final book which we need to track for preparing bank reconciliation statement is passbook. A passbook or a bank book is a paper book which is used to record all bank transactions such as presenting the check received from debtors and issuing the check to creditors against the payment which an organization is liable. All current account holder will be provided a passbook. All businessmen shall open a current account in any bank. Now, let us see how the various transaction has been treated in the passbook. As we have seen, if any amount has been deposited in the account, then we will become a debtor for the bank and the bank will become a creditor for us. Likewise, if we have withdrawn some amount from the account, we will become a creditor for the bank and they will become a debtor for us. Likewise, in this example, Mr. B, a current account holder of Bank of India, very first time, he has been deposited a cash of rupees 8,000. So the bank balance is 8,000, that is credit balance. Next, he have been received a check from Mr. S and it has been presented and it got cleared. So further 2,500 rupees is increasing in our bank balance. Further, insurance premium has been paid either under bank instruction or through check. So that 500 rupees, that is insurance premium amount, has been mentioned in the debit column and the balance has been reduced to 500, that is rupees 10,000. Again, Mr. B has withdrawn an amount of rupees 5,000. So the bank balance again is getting reduced to 5,000. Mr. P has been received a check from Mr. B and it has been presented in the bank, that is rupees 1,000. Again, that 1,000 rupees has been deducted. Finally, interest on investment collected. So, again, either by check or through standing instruction, the interest from the investment Mr. B has been made has been deposited in the account. So, the bank balance will increase to 4,600. This is a cash book of Mr. B. Before we are getting into the cash book, we need to know what is contra entry. Under three conditions, this contra entry will apply. The first one is maintaining a bank balance. The second one is depositing the amount in the account or withdrawing the amount in the account. In this example, that is Mr. V's cash book, the very first one is we are maintaining a balance of rupees 8,000 in V's account. Therefore, in the debit side, it has to be mentioned as to cash rupees 8,000 in the bank column, and on the credit side by bank and rupees 8,000 on the cash column. And again, Mr. V is receiving a check of rupees 2,500 from Mr. S. That has to be reflected on the debit side of the cash book, whereas it is an income for Mr. V. And again, Mr. V is withdrawing amount from bank of rupees 5,000, whereas withdrawal of amount or depositing an amount ought to be considered as a contra entry. Therefore, in this cash book, it has been reflected as to bank rupees 5,000 on the cash column and by cash rupees 5,000 on the bank column. And again, interest on investment has been deposited in the Mr. B's account under standing instruction. Therefore, it is an income for Mr. B that has been reflected on the debit side of the cash book. Again, on the credit side, we have issued a check to Mr. P and that has been presented, and the amount has been debited to Mr. P. That has to be reflected in Mr. B's account on the credit side as it is an expense for Mr. B. After entering all these transactions, the balancing amount has to be found out. That is rupees 4,600. Now, we'll check out for what reason we are making a bank reconciliation statement. As we have seen before, we have seen one format of cash book and another format of passbook. Both has to be compared equally, and they have to find the difference, and for what reason such difference has been occurred has to be found out under bank reconciliation statement. Here we are going to see whether the balance of passbook as well as balance of cash book are one and the same. Yes, in this example, both passbook balance and the cash book balance are one and the same. But in practical, it is not possible for having the same balance on passbook as well as cash book due to various reasons. Let us see for what reason those differences will occur in the next video. Thank you for watching.